from Bell Direct is standing by. Julia, kind of good economic data enough to just add to the positive sentiment swelling around the markets at the moment.
Carson, it was a great session on the Australian share market. 4,800 is a level that we've been watching for at least a month now. We smashed past through that barrier and we saw a new record high for 2009 at 4,840 points. I guess we saw a negative lead from Wall Street as well as base metal prices, but the thing that really tipped the balance in the Aussie share market's favour today was Intel's result after the bell. We saw Intel coming out with earnings per share for the third quarter of 33 cents compared to an expectation of 28 cents. In fact, if we have a look at Intel, it beat on the sales number, the profit number, the outlook, as well as the margins, and that's been a positive for the US futures all day. In fact, we've seen the Dow futures up 0.9% and the Nasdaq futures up about 1% for most of the session. So it does look like the US is going to have a good session on the back of that. The Australian market responded to those future movements and we saw gains across the market. The best sector was the energy sector, and that was because oil prices traded at a 7-week high overnight. We also saw a lower US dollar, and of course we know that's good news for importers. So the retailers gained today. We saw Harvey Norman gaining 2.2%, and we also saw JB Hi-Fi up by a massive 5%. In fact, the only sector that didn't really manage to gain today was the telecom sector. We saw a fall in the telecom sector, but every single other sector is trading high today on the Australian market. We also saw some good volumes for a Wednesday.
All right, well, it's going to be JP Morgan first off the block in the United States, and I've got to say I'm nervous. Don't know about you, but it has risen that S&P 500 60% in the last 7 months. So we'll get a read on just whether those rises there are justified. What about Rio's rise today? Do you believe the rally was justified?
I think the rally was anticipated. If we have a look at Rio Tinto and the expectations coming into this third quarter production result, the market was expecting to see an increase in their annual forecast for iron ore of up to 7%. Well, we did see that increase, an increase of between 5 to 7.5%, and the market was pretty happy with that. If we have a look at Rio Tinto's intraday graph, this is what it looked like. They came back online just after 3 o'clock, and you can see it saw an extra leg up for its share price, but the share price rallying into that result today. If we have a look at the actual result, we saw third quarter iron ore results up by 12% on year, not wholly unexpected given that we saw Fortescue's results seeing production up 20% on year. We've also seen the World Steel Association come out and give its August forecast and August production results, and it's up 26% from the lows that we saw in December 2008. So that wasn't really unexpected. We did, however, see coking coal down 5% on year, and we saw aluminium production down 4% on year, although it was up by 2% compared to the previous quarter. Copper was a standout, up by 46% on year, but down 5% in the quarter. And in fact, if you have a look at the outlook for copper, we may see weaker days ahead with possibly some weakness in the price of copper over the next 12 months. Also, we got some numbers out of China. If you have a look at the import numbers which were released today, we saw some strong imports for the month of September. In fact, if you have a look at iron ore imports for the month of September, up a massive 65% on year, and all that combined for a pretty good session for Rio Tinto and a good gain up by about 1.2% after its result.
Okay, just one thing that did catch my attention of all those, the roll call of numbers there. You're reckoning copper prices could come under pressure. Citi came out with a note today and actually upped its 2010 copper price 16%. So where are you seeing the weakness there for that commodity?
We saw Rio Tinto come out last night, and if you have a look at some of the announcements coming out of London saying that we could see weakness in copper demand out of China in the short term over the next few months, and possibly some weakness in prices of copper over the next 12 months. Not only that, we saw China's third largest steel mill come out to say that China has plans to curb some of the production in steel because of the excess capacity at the moment. So things pretty uncertain in terms of the China picture. We know that the last quarter was very strong, but looking forward, it's a bit of a more uncertain picture in the quarters ahead. We did see Rio Tinto, though, up its forecast in terms of its iron ore upgrades. We saw some good import data coming through in terms of those iron ore numbers for September, and that was good news for Rio Tinto, which is the second largest iron ore producer in the world.
Yeah, we've got BHP Billiton with quarterly data next week. It was interesting, their stock was nudging lower before these numbers, but it was pulled up, that perhaps in part, in large measure, because of the good print from Rio. Gold pulled up overnight, indeed, striking intra-session highs of what was it, about 1069.70 an ounce.
We saw a New York session high of 1069.70 US an ounce, and in Asian trade we managed to beat that by 7 cents. So in Asian trade we saw a high of 1069.77 US an ounce, and a lot of that has to do with US dollar weakness. Now, rising equity markets is good news for things like the Aussie dollar, the New Zealand currency, the Canadian currency, which is seen as higher risk plays, but of course bad news for the US dollar. And we know that when the US dollar falls, it's good news for the gold price at the moment, and that's the main driver of gold prices. In fact, if we have a look at the gold miners outperforming the market, Newcrest Mining reaching a 52-week high during the session today, up by 2.3%. So altogether, the outlook for gold looks pretty good. Unless we see the US dollar start to strengthen, then it does look like gold prices will continue up. And we've seen this since the gold prices have broken that 1,000 US resistance level quite strongly. It really doesn't seem like there's any signals for gold to go lower at this point in time.
Seems it's also taking its direction from a rising oil price, so a lot of factors propelling it upwards. Thanks for your insights, always appreciate it.
Thanks, Carson.